This is Dirty Little Bank Secrets Part 4. Firstly, the dirty secret is if you're getting declined for a home loan, it's not because you can't service it with your current income, it's because the bank is choosing to use a higher assessment rate. So right now, let's name and shame the banks that's using the highest assessment rate to assess your dirty ass. I mean, your beautiful ass, my future potential lovely client. So here's a diagram of the highest assessment banks and the lowest assessment banks. And again, I'm not going to name and shame them by calling out the names. I'm going to give you some hints. The biggest culprit here in terms of using a high assessment and potentially declining your sorry ass is the orange lion logo. Now these guys do this strategically, okay? They give cash back, they've got low interest rates, but you won't get a lot of servicing from them. And that's because they want high net worth clients with high income, and your sorry ass PAYG income is not good enough for them. Then we have in the middle the big fours and their sister companies. I won't name them, but you should know who they are. These guys add a 3% buffer on the actual rates. For example, the rate was for example, 5.5, they'll go up to 8.5. And lower on the assessment rate spectrum, we have Liberty, Pepper, Bluestone, and you're wondering why are you naming them Q? Well, they're too small to sue me, and I'm actually not naming and shaming them. Now, if you look at this diagram in conjunction to rates, when you have low serviceability, you also will have a low rate. But when you have high serviceability, you'll get also a high rate. So my 2 cents is not financial advice. If you're trying to get finance to complete a purchase, which most of the high assessment banks will reject your ass. I mean, they'll add buffers to your living expenses. They have DTI, which is debt to income ratio, which is really hard to pass if they're trying to not give you a loan. Well, you got a temporary cop on the chin and get a higher borrowing capacity with a lower assessment rate by getting a higher rate. Maybe sit on that for 2 years, improve your serviceability and refinance. But if you're trying to refinance and you're in mortgage prison, here's another dirty secret. Strictly for refinance only and usually dollar for dollar, currently a red big four, hint hint, and a sister company green dragon, instead of using a 3% buffer on top of the actual rate, they're actually only using 1% buffer. And here's a secret. By doing that, you can actually increase another $200,000 in borrowing capacity. But only for AAA plus rating clients, which means you have a really good credit score above 850 points. It's called the Streamline Refinance. It's only for dollar refinance. But here's a little dirty secret. You can actually get an extra $50K cash out if you ask them nicely. So for those mortgage prisoners or about to approach the mortgage cliff, you can try this red green dragon. Follow for part 5 for more dirty bank secrets.